Can everybody hear me? Let's see here. So make sure audio's working. Cool. Just 1 second here. Let's get the chat pulled up. How's everybody doing? Yeah, thanks. Somebody helped me out with that. Not sure who that was. Just kidding. Thank you, sir. So I'm going to wait like another minute or so, and then we're going to get started. So today, what I'm going to do actually is try and help you guys figure out a starting point. And then we're going to kind of dive into a little bit of the basics of stocks and options and trading and things like that. This slideshow is minimal, but I will be adding to it, and I will be uploading it for you guys to see and to go back and look at it in the future. Yes, I agree. Gonna need to figure out how to do that, so. But I'm sure somebody in here might be able to help me, but we'll see. All right. All right, so we're going to get started. So, first question you want to ask yourself is, why are you here? You know, some of us have a reason to be here, whether that's your interest in trading, whether that's you're trying to make money, you're bored, you're interested in investing, you're seeing all this stuff on the news all the time. I know that the whole GameStop thing brought a whole bunch of new people, and actually when COVID started, that's when everybody got their first initial stimulus checks. A lot of people started. You got lost on your way to Taco Bell. Nice. I'm going to tell you what brings me here and how I got started. So, when I was in high school, 32, about to be 33 in April, but just give you a little background here. When I was in high school, I actually was interested in being a meteorologist, but my grandmother was trying to show me some of her investments and things like that. And so I was kind of interested. And then we had this project that we had to do where we had to follow a professional my senior year. And so I decided to follow somebody who was a financial advisor. And all of that got me interested in the markets, and it was really cool. And I was really interested in it, and ended up going to school for finance, which was awesome. Traded all through college. Trading is what got me to pay for all of my college, and it was great. Getting out of school was right after the financial crisis, so there wasn't really any jobs available for things that I wanted to do. So got stuck with the family business, and now I'm sitting here teaching you guys because all these years, going on 14 plus years now, being involved in trading, I'm here to give you guys what I know, some of the mistakes that I've made, and how you can learn from those mistakes. So, I just gave you my example of how I was inspired to learn how to trade. So, next is, what kind of trading are you interested in? So, some people are always looking for the big, shiny, quick money situation. I mean, we live in a society, I think, where everybody wants that quick fix or that easy money or that, you know, that shiny new toy. There's different types of trading. You've got stocks, you've got options, you've got bonds, which I'm honestly not going to show you because they're pretty freaking boring. You've got futures trading, and now you have crypto. And you also have Forex. Now, I used to do Forex, and Forex is not something that I have branched off yet with FYE and trading and training and all that. But that might be something in the future that we will talk about. So, if you're interested in stocks or options or even crypto, this is the place where you want to be, as well as futures. And we go over futures every day. If you've been in the room, I am I'm a big believer in how the futures market really shapes the entire market every single day. So, in order to do that, then you have to ask yourself, how much capital are you willing to risk? So, this is the most important question that you can ask yourself from the beginning. You need to come up with an amount that you can afford to lose. When I say you can afford to lose, you can afford to lose every single dollar. If you can't afford to lose every single dollar, it does not need to be in your trading account. You do not need to risk money that you use for other expenses that you have in your daily life. You do not need to use money that, to pay rent, your car payment, insurance, anything like that. That's an absolute no, especially from the start. If you're starting off that way, you're setting yourself up for a big problem in the future. So that's where I come to, are you aware of your emotional and psychological state in regards to trading? Because, we see these GameStops, AMCs, Dogecoin, these huge returns. I'm willing to throw money into whatever if I can make a quick 100%, 200%, whatever, more. That's the gambler mentality. And over the long term, that will not be profitable 100% of the time. Because what's true when you go to the casino? It's that the house always wins. Wall Street is the biggest casino in the world. And when you go to the casino without the knowledge of what it takes to be a trader and the proper strategy and the proper plan and the proper allocation of capital, you're setting yourself up just to be a gambler and just to be what they like to call a fish in the casino. Deep pockets. You could have all the money in the world. It doesn't matter how much capital you have. If you have the gambler mentality, you will lose every single dollar. You will never when you get your when you get your end of the year statement, you'll see a big old negative sign that you'll be able to write off every year instead of yes. But to me, this is the most lost thing right now, and we live in a society now where gambling is very prevalent. Sports, you've got DraftKings, all these different things, all these quick big money situations where you can just make all this money so quick. I mean, I'm seeing on Twitter now these people making tens of thousands, even hundreds of thousands, even millions of dollars over the last year just trading. But to me, it's not sustainable because the way that they're accessing this return is by taking huge risks without a proper trade plan. I might be wrong, but I'm going to tell you that at least 80 to 90% of those people are probably not going to have that much money down the road. So, all that being said, have a plan. So, never invest or trade with money that you cannot afford to lose. Develop a trade plan. So, when I say develop a trade plan, this is what I mean. Let's say I'm willing to invest or trade with $1,000 in total. Not even 1,000. Because to me, 1,000 is kind of hard developing a trade plan, but I know that some of y'all only have like so much capital to start with, and I have to be realistic. But let's start with $1,000. Let's say I'm only willing to lose up to $100 on a position. I'm willing to lose 10% of my entire portfolio value on one position. So I personally have a strategy that I use with options in particular where I'm willing to lose 50% of my investment on a position before I cut it loose. Now, to be honest, for me, that is a mental stop and not a physical stop. But in order for you to learn, I think it's best that you guys set a physical stop to get yourself used to that. Because the most important thing is to minimize your losses, not maximize your gains. The amount of money that you risk, you have to minimize your risk, period. So if I'm only willing to, I can only lose 10% of my portfolio on this one position. Like, let's say I have 5 positions, 200 apiece, okay? Then I'm willing to lose 50% of each of that. So I'm willing to lose 100 on each position, so to speak. When you spread it out like that, you give yourself more opportunity to make it back in other ways. If you have 2 positions at 500 each on $1,000 portfolio, and then you lose on 2, then you're already down to $500. But let's say you go 3 out of 3 for 2, right? Make 100% on 2, or 3, I'm sorry. So it's $300 extra dollars. And then you lose $100 on the other 2. You still net $100. And you did that because you have a trade plan. You have a profit taking strategy, or a minimize your risk. You minimize your losses. Some people do 30%. Personally, to me, 50% is a little more reasonable, especially in the volatile market that we have today. So, then you also have to develop a profit-taking strategy. And like I said, so you need to also paper trade your plan. If you've never traded before, paper trading, there's nothing wrong with paper trading. There's nothing wrong with trying it out, seeing how things work out. You don't have to lose the capital. You can do it in real time. So many different platforms use it. Think or Swim even allows you to go back on a previous day and paper trade, and you can act like it's a normal day live. But anyway, so then develop a profit taking strategy. So let's say I have a position. This is one of the profit taking strategies that I have. Let's say I have a position. It goes up 25%. I can immediately eliminate my risk by setting my stop loss at a 0% gain at that point. That means I will not lose a dime on that position. At 50%, I can take half of it off and ride the rest and put money in my pocket. And at 100%, I can take another piece off. Or I can take it all off, depending on what your strategy is. For me personally, at 25, I take a quarter off. At 50, I take another quarter off. At 100, I take the third quarter off, and I let that last contract ride. Now, why do you do that? Because you don't really know where the maximum gain is going to be. So it's important for you to always lock in profits on the way up. Because this market does not care where you bought something. It doesn't care where you sold anything. It's going to do what it's going to do. And it can immediately go against you at any point. And it does not care. So if you have an ability to lock it in, lock it in. This is my number one motto right here. And then when we go from here, we're going to go to Think or Swim here in a minute. And we're going to check out some basics here. The capital loss is far worse than opportunity loss. There are opportunities in the market every single day, all times of the day, but never chase something that you missed. You are not guaranteed more capital, but you are guaranteed more opportunities. And in doing so, and in that thought process, you have to think, so the first part of, exactly. So the first part of this goes back to what I mentioned about risk and what you're willing to risk and how much you're willing to lose. You cannot think in terms of how much money you're going to make every day. Because if you set, like we did post up recently, profit if you make $100 a day, $200 a day, whatever. The most important thing every day is that you minimize your losses and take your profits along the way. Because again, there is always another opportunity. That's why capital loss is far worse than opportunity loss. I can spend $1,000 on a position and it be lost because I went to go chase it. Or I could just wait for the next opportunity. There's so many great setups. Sometimes you guys will ask me a question about a particular setup and it's not that great or it's okay. But in reality, don't force the trade. Don't just guess. Because at that point, you're just gambling. You're not being a trader. You're literally just gambling. You need to actually go after the opportunities because there's plenty. You got to find the opportunities when you see them and wait for them. In the past, we drew, I think in the last session and in previous sessions, we've drawn up alerts on a chart and things like that. So this is what you're going to do. What we're going to do now is we're going to go to Think or Swim. So let's do that here. Give me 1 second. Does anybody have any questions so far? Comments? Sorry guys, 1 second. Just putting this up here for me. Okay, so like I said, you want to have a trade plan. So when I'm looking at something, and we're just going to look at spiders. Now, or let's go back more real quick. Sorry, we'll pull up something where I don't have a bunch of lines on here because I keep forgetting that this is the beginner. So here we have a chart of the Qs for the NASDAQ. Now, I use some really basic indicators on my charts. Some people like to use really complicated, complex situations. For me, it's not what I'm into. Because even being simple is probably the best way to do a lot of things in your life. So right here we have moving averages. These lines, they're moving averages. And you have simple and you also have exponential. So I like to use exponential. So they're a little more heavily weighted. So they'll go a little bit stronger with the moves. So I have an 8 and a 21 moving average. And then I also have this 89 moving average. Down here you've got the volume. There's a volume for all these bars. This is an hourly chart. This is the price of the stock. Down here I've got something called an RSI, which is a relative strength indicator. So under 30 is very weak and over 70 is very strong. But there are trades where it goes below 30 and back above, where it's a buy and it's oversold, so it's in a buying opportunity, and there's over 70 and back below, that's a shorting opportunity. Some basic things here. Pulling up the trade tab if I had the Qs. So here's the price of the stock, how much it's changed for the day. So now we have a bid and an ask, so that's how much somebody's willing to pay for that at that moment, how much somebody's willing to sell it at that moment. That's the number of shares on each side right here. It's the volume for the day, open, high, low, and that's pretty much all you need to know there. When I go to look, and feel free to drop a question at any time. So these are what we call option chains. So we have weeklies, which are highlighted in yellow, and then you have the monthlies, which are just regular gray here. On the right, you have something called implied volatility here. So the higher the implied volatility, the more volatile they expect the stock to be in that period of time. On the right here, you have the expected move. So that's a plus or minus $2.86 expected by tomorrow. That's the expected move. Now, how is that figured out? I'm going to go and open this up, and we're going to scroll all the way down here so I can show you this. So this is currently priced at $334.58. So they calculate this move by adding the in the money, this is 334. So they're adding up these two contracts because at the money right now traded at the midpoint here, a dollar, let's say $1.55. And on the other side, $1.10. So $2.55 plus or minus is the expected move that they have. Basically, it says 286 here. So that's probably based on this one. It's probably actually based upon this right here. These two. But anyway, this is the expected move by that time. So by that alone, you can kind of measure how far out. Now, if I was looking at like next week's contracts that expire, so this is the date that it expires. This one expires on the 19th. If I was to look at that, I wouldn't want to go like further outside of the expected move, which from this point would be $9. So it wouldn't make any sense for me to go get anything over a 343 position right here, because you probably have a low probability of it doing anything for you. And we can dive deeper into that in the future. So the one basic question that I should have told you guys, and that you're probably wondering, is what actually is an option? So an option is the right to buy. It's a contract, okay? Usually it's used as insurance, but it is the right to buy or sell a stock at a particular price at a future date. So each contract is for 100 shares. So, based upon that, for example, on the left here we have the calls, which are the right to buy, and on the right here are the puts, which are the right to sell. So this contract, for example, is $1.99 here. So this contract has the right to buy the Qs at $338 on February 19th for $1.95, which means that your break-even price, let's just say it's $2, is for the Qs to be at least at 340 if you held the contract all the way to expiration. Now, me personally, I usually don't hold contracts all the way to expiration. There's a couple reasons for that. Number one, you have something called the Greeks. And the most important Greeks for you to know for a beginner is delta and theta. So what delta is for every dollar increase of that particular stock, that is how much that contract is going to move up. So for example, that 338 contract, if the Qs were to go to 335.58, then that contract should go up 34 cents. Okay? For that dollar move. The other important Greek that you should know is theta, which is for every day that that contract loses, that is how much money the contract is going to lose. So you can see here that that 338 contract is going to lose 18 cents tomorrow if the stock does absolutely nothing. Does nothing. So theta is important because you see that's 8 days out and the theta is 18 cents, right? Look at tomorrow's. Look at the theta for tomorrow. Come down here. Let's look at the 338. The theta for tomorrow for the 338 is 12 cents. But look at how much that contract is. 16 cents, 16 cents, yeah. Which means it will lose almost all of its value tomorrow. Even get closer to the money here. Look at this. It's going to lose 35 cents of its value here off from the minute it opens. And theta increases the closer and closer to expiration up until expiration. So it's very important for you to pay attention to that. You don't really want to own contracts that are, even if you do own contracts in the front week here. Let's say this was we were in Monday or Tuesday right now, or even Wednesday. It would be okay to still be trading these contracts. But unless you plan to hold them until expiration, which I would not recommend, then you would want to be out at least a week or 2 or 3 or 4 or even 5. You know, the way that I like to personally trade, I like to be within 3 weeks, because usually if something moves, I get paid on that movement, but my theta is not going to kill me if it goes against me. But the further you go out, the theta is much smaller. I mean, let's go out to June, and let's look at the theta of that 338. Theta of that 338 right here is 8 cents of an $18 contract. That is a far less percentage of that contract. So theta is time. It's the time value that you lose for every single day that passes. Any questions? I'm going to point something out to you, and this is something that I heard today, and it made me sick. So, and this is where education comes in and how it's so important for people to know what they're doing. Just want to point this out. So PayPal right now is trading at 285, okay? Tomorrow, this $300, which means that this contract, this stock needs to go up $15 or 6% from here, okay? 6%. People are buying the heck. Look at the volume here. 32,000 contracts today traded at the $300 level. Yes, they're only, 27 cents or 25 cents, but that's how much they are now. I want to show you this. We're going to do a quick, we're going to look at the chart of this. Okay? Hold on. Let's pull up a chart of this contract. I want to point this out. This is where education comes in, and this is what bothers me, is that people are just gambling these days. They're not actually doing smart things at all. Look at PayPal. Look at the volume here. Look at these contracts being bought right here on this contract. All the way up to $5.98. Look where it closed, 26 cents. That is not what traders do. This was being talked about on Reddit today, this position, and this is exactly what caused this. And that's why I'm bringing it up, because this is no offense to the Reddit and the Wall Street bets and everything else. This just goes to education now. Shouldn't be jumping in things that you don't know nothing about. I mean, we can look at PayPal overlapping here, right? And let's look at, this is the chart right here, okay? If you're still buying, like, you're still buying contracts here with 1 day out, doesn't make sense. Not even a little bit. Anyway, so going back to this. So let's look at the Qs again. And you might want to say, okay, how do I do a chart? How do I do these lines? I see you doing these fib drawings and all these different things. Like, how do I use it to my advantage? So I'm going to pull up a daily chart here. I haven't done this in a while, so we're going to move this. Don't directly trade the Qs that often. I'm using this as an example for you. I'm just going to point this out here. Here's a pattern right here. See this nice little wedge right here? Drew that out in the past. You see how it breaks up and over that? So you can draw patterns like this, and that's your confirmation right here that that's a long trade. So here again, I'm going to back this out a little bit. What I like to do is do a long-term trend line. So we're just going to go from the bottom here and touch that right there. And then what you can do is you can right-click this and redraw this as a channel. Right there. So now you have a general idea of the channel that the Qs are trading in. So that being the case, you can say, well, my maximum upside is, up on this line, and my maximum downside is up on this. And why is that important? Because I'm not going to enter into option contracts that are going to be exceeding these levels by these times. See here? I want to point this out. I've got the dates on here. So let's say I'm trading 219s, right? I would not want to own contracts that are below 326 to the downside or above 348 to the upside, because those are probably, it's not a guarantee obviously, but they're probably the farthest they would go in each direction. And so if you're looking at this here and you're saying, well, it's hard to say because it's in the middle. And that's my point. Because it's in the middle, it's hard to determine that there's a trade here. So don't force it in the cues here. Now let's look at something else that might have an opportunity. And this is Apple. So I'm going to point this out. I'm going to remove this real quick. This is something that I have been on, and I'm remaining on, because I'm going to do a trend line right here from this low and bring it out. And I just want to point out touch, touch, touch. So to me, this is showing support with the way that we were able to bottom out here. Why is that also important? Because you see here, we've got a low here, and we have a corresponding low right here. And where does that also meet up? With the bottom of this gap right here. So you have three separate points. 1, 2, 3. All confirming upside here. Upside potential. So, if I was to draw something else that I've been teaching y'all recently, which is fib extensions. These are really important because you can either go, if you're playing to the upside, you can go high to low to high, or the downside to go low to high to low. So if I go high to low to high, what else do you see here? We hit this point right here. That's to the downside. If I do low to high, low to high to low, take this other one off. Sorry, 1 second. Remove that. Then I can use this as my targets. Now I'm going to point out, that's how I draw that. Now I'm going to go back to the futures here in ES, because this is what I did for this. And it's played out perfectly well in regards to that. So I did fib extensions for the month of January to determine where we would go for February. And I went from the low of the month to the high of the month to the low of the month. And I want to point this out so it's actually easier to see on a shorter term. But you can see how all of these levels were levels of support. Consolidation support, support. This is over the 100 line now. So that's why my target is 39.91 now. Because unless we come down to here, we're going here. And that's why I have been pretty, stuck on that. And I also want to point out this. So this was the other day we hit this point of control, which I had mentioned to you. That, and I need to explain that to you newbies, but there's something called market profile, which actually shows you the breakdown of the volume and the price on the chart. Everyone's used to looking at bar charts here. Candles. This is not a bar chart. This is a candlestick chart. Excuse me. This is a candlestick chart. Right? Let's show you something crazy. It's called monkey bars. So on the monkey bar chart, this shows you volume on the left, price on the right. So this is for today. Okay, right here. This is today's trading. This is right now, futures trading, right now. So this gray area right here, that is where 70% of the volume traded today. And this pink line right here, that's where the most volume traded today. So we would call this the point of control. On the right here, we have the price point of control, which is where price stayed the longest today. The longer these numbers are, the more time that's spent at those levels. And you can see that closer if you zoom in. Zoom in here. Oops, hit the wrong thing. You see here? You see how the longer the numbers go out? That's the more time that's spent at these levels. So why is that important? Because you know where the volume is. So you know where traders are at. You know where if we get under this level, all these people are in pain. If we get above this level, everybody's happy. So you're more likely to continue to go higher. If you're below this, then you're more likely to continue to go lower. So every day, what I do, and these lines are old, so we're gonna redo them right now. I go up here to the top of this shaded area and make that my value area high with a line that I've created. And I right click this, make that my value area low. And then since we broke the VPOC today, we're not going to keep it, but we're going to put this in the middle here. I'm going to change the date to 2/10/11, sorry. 2/11. Okay. So what that's going to do for me is that's going to show me the value area tomorrow. So where 70% of the volume traded today. So if you're ever trading above value, it's bullish. So if we're trading up above here, up here, then that's bullish. If we're trading in value like we are now, then the market's in consolidation. It's in balance. There's no real direction. If we're trading below value, then that is a little bit bearish. But we're not. Back to the regular. So you can see that now on my chart. So when we cross point of controls, we remove them off our charts. So I had that one there and we broke that the other day. I'm going to remove this box because that was the value area for one day. So what I do as well is I will make a box for tomorrow between value area high and value area low. So the value area is highlighted. Okay? So if I'm looking at this which is the ES. Now I have these numbers here on the right. So I've got R3, R2, R1, the pivot, S1, S2, S3. What are those numbers? So these are the pivot points that we can calculate based upon the price action from the previous day. So this is what I'm going to do. I have this available, and if you need it, please send me a message on Discord. But let's see here. I'm going to pull this up. Give me 1 second. All right. Let's edit this. Properties. All right. Can we see that on the screen? Oops. So you can see this. So here, can you guys see this? Yeah, okay. All right, so we have the high, the close, and the low. So I'm going to go to the daily chart. This is that candle. So the high was 390, 320, 50. The close was 3905.75, and the low was 388.450. Okay. After I do that, I'm going to bring it back in closer so I can see everything. Zoom this out, and I'm going to start editing my points so you can see them over here. I'm going to change my S3. Is it not showing that? I just realized it's not showing that on the screen. Let's see, how can I do that? Let me make sure it shows you that on the screen. Anyway, I want to change these numbers. So I'm going to right click these and edit properties. And I'm going to change those values. So S3 was 380.5067. S2 386.58. S1 388.667. Pivot 3903.58. Then R1 2267 R2. So I want to point out that you can see that these numbers are rather large, or the range is kind of large. And that's because today's range was rather large. We went from the high as 320 all the way down to 3 right here. So being that it's a big range, we end up with larger range area for the next day. Now sometimes when I see that, it might actually end up being kind of a wash for the next day, a sideways action. But we'll see. We'll see. But either way, these levels are important because they are inflection points for the next day. And you can use that calculator for any position that we have. All right. Do want to go over just a few more things that we got ourselves into today, and then any last chart requests, go ahead and ask them now. So let's see here. And any other questions that you have. I'm going to take this down. Take that away. Okay. So today, let's see. Yes, sir. BA. Let's look at BA. So we have this. This is what we broke out of. And what you can do. This is kind of like a bull flag. This is a short-term chart. Let's look at let's look at the daily here. I want to point something out. So this is what we can do for BA. Because we're curious, like, what are the targets for this thing? Right? So we can do a fib extension from this low to this high to this low. Now, does anybody else see what I see right now? Where was the first resistance at? Right there. Amazing how that works. Now, the only way I would ever get off on a trade like this is if, number one, that this main beginning trend here was broken. And number two, if we lost a bullish cross. Like we have a bullish cross right here, 8 going over the 21. So theoretically, these are all future targets for BA on the daily chart based upon this price action. So I would look, based upon this, you can take this candle, I would actually, you see how we have some support here. I'm going to use the top of this candle And you can see how that basically played out support here, 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 and here. So I would set an alert for this drawing. Crosses below that, then we might have something to worry about. Otherwise, should continue up to our next target, 230. Can I get there? Well, let's see. That's 1 week, right? So in 1 week's time, tomorrow's the 12th. Let's just count the days. 1, 2, 3, 4, 5, 6, 7. So the range here was what? You can see right here. Let me see. Where does it show me? See on that blue area, or in that box, you can see the number of days. Hold on. I'm going to go. Oh, why did I do 7? It's 5. Sorry. 1, 2, 3, 4, 5. Okay. Sorry. It's 5. So it can move plus or minus $10 from here based upon that angle. You see how it's coming up with that right there in that box? You don't hit the trend line. You can just play around with this. But this way you can kind of, use the trajectory to your advantage to see how far up we can actually go in a week. So this trajectory is like about $10. So if we're going $10 from here, it's like 220, maybe 225. But we've had some consolidation or balance the last few days. Pretty likely, given that this is like a bull flag formation coming up here and then going sideways, that we would just go up into there. All right, Verizon. So this was your key right here. We had Verizon in this, and then once we broke that right there, once the trend was lost, you got to get out. You can't stay in the trade. We actually had a profit on this trade at some point, and this goes back to having a trade plan. We were well over 25%. I think we even got over 50 if I'm not mistaken. Let me check real quick. Verizon. So Verizon hit 33%. So right now, honestly, looking at this, we did break that. That doesn't mean that it can't hold this low down here. And I'm not saying that's completely lost. If you still have it, there's no reason to not possibly see if you can get a bounce here and head back higher. But once we broke this trend right here, that's tough. It's not a good setup. Any other requests? So what's important about the fib? Yeah. So a lot of people are familiar with something called fib retracements. But not a lot of people are familiar with the extensions, and I've found the extensions to be a lot more usable. And they're important. Sorry. They're important because you have to think, what type of market are we in? Markets aren't trading upon fundamentals right now. They trade based upon what computers, AI, all that kind of stuff. I mean, I haven't even done this, but I'm just going to go for it and see what happens here. I draw a fib extension for this, and I'm just curious as to where these levels are. I haven't even done this. So I'm going to go high to low to high right here. Right there, and that's not very accurate. Let's remove that. Let's do it a little more accurately. Low to high to low. Notice how that was support there. Notice how we go up into there, off, support. This level, I put the top of the gap, so it meets top there. Breaking over, that's support, there's the support. That was the top of that bar, that's why I set that line as a breakout level. That's why when we hit this point right here, we broke out, that's why I got into WDC, moved sideways, came down, nice fake out with below and fail, up today. Now, usually people draw fib retracements. So, let me go out further here. Some people use things called fib retracements. Let's look at the extension though on this one. So this is the low of the S&P right here. Then I'm going to connect it to this high and then connect it to this low. Boom. So let's look at this. This is a 3-year chart, and this is a weekly candles. But you can see how we moved up into their support, up, support, 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 up, resistance, support, up, breakout, support, up, support, riding this thing up, hit our head on that, and then look, we're breaking out. So where's the next target? Unless this is broken. Give me a random symbol and I'll show you anything. We can go back to this because this is something I drew for MJ. And this was the day of earnings. Rejected that, came down to the 161, found support, busted through today on news. Coke. Ah, got a breakout here. Did you ask me about Coke before? Now check this out. Last time I highlighted Coke, we had this area of balance right here. That's what I highlighted. I said we'd have to break out of the balance for you to be bullish on this stock. And look at that. Broke out of the balance right here. Held it here and higher. So, how would I draw this one? Most recent low, or second most recent long-term low. Boom. 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 Check this out. Here, found support here at the 23. So that's bullish. You also have a bullish cross getting ready to happen here on the daily. This is a great setup. When you see these nice, long, rounded bottoms, this is what I look for. I mean, everyone likes a nice round bottom, but um, this is a great setup. I mean, you've got a breakout out of balance with a bullish cross up above its first fib level. This is a great setup. Just had earnings. This is a good one. Alright, if anybody else has one, go ahead and say it. Otherwise, I'm going to go to sleep. No, man, we haven't talked about UPS. Okay. Remove this. Kind of remove this. Alright. So, I follow UPS all the time. And it's just been stuck in this range forever. That being said, had a nice little bounce right there. That kind of coincides with this top And let's see, that top, got some other. So how do I feel about this? I'm gonna go from low to high to low. And then I'm gonna take this trend line right there. I'm gonna set an alert. If we go below that, I'm out. Otherwise, these are your targets right here. So definitely had a retracement off the highs. It was a great trade, but it does look like it's found some support. AAL. So I think this was my buy point right here that day. Went up to here. Let's look at a daily. So we still have this long trend line higher. So I would use, let's use that as the high. Yeah, no problem. So low to high to low. So you can see it struggled to get up and over that 23.6. So it's got to hold this trend line. This also is support right here. It has to hold that. Don't want to ever see it really cross the 21 here. It's not the greatest setup. This goes back to, my motto. This isn't a great opportunity. Now, if you're in this, then I would look for you to hold this level. And you also want to break out up and over this level as well. It's kind of in the middle. Nothing crazy there. Look at this. Beyond. Breakout. Consolidation and boom today, right off the trend line and there. Just absolutely beautiful setup. Unreal. I missed this. Anyway, I think I'm going to go to bed. Thank you guys for hopping on. Appreciate it. If you have any questions, hit me up. Never be afraid to DM me. Please like and subscribe this video. Please tell your friends. We are almost at 100 people. We just need one more actually in the Discord for 100 people. So thank you guys for being a part of this great community. We will do more videos in the future. And get some rest. Thanks.